Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now with Aniti Edet. Aniti, good afternoon.
Yes, good afternoon, Amy, and happy midday, midweek. Let's talk about that. So,
Yeah.
what you can see on yesterday, you were on the market and you talked about the market being in the red a second day. No thanks to profit taken by investors, of course. They have to
Yeah,
take
Boa
profit.
Cement seems to be getting a lot of profit taking on it these days since last week.
Exactly, and that also
maybe there's news in the horizon, that investors are privileged to get, and that's why we see that.
But let's just hope that that news is not a negative news, because sometimes it could be a dumping of the shares. On one side, there's profit taking, and then, of course, there's also that caution that something could be going on, because if you take a look at their financial performance, it wasn't something too gladdening to talk about.
Yeah.
But let's talk about the intraday numbers, which is sort of a gladdening for some of the investors. At intraday, you see the market at a tad 0.06% intraday movement. But the bad news is that the market, it's official now, it has fallen to about a one-year low, 97,444.99. That's the magic number at intraday, although that number was about an hour ago. So, but intraday, the market is still oscillating, fluctuating in between greens and the reds, in between this number, higher and lower. For the JSE, well, before we talk about all the other markets, most of the African markets were in the green except for just one, but we'll be looking at that. JSE, it has gotten back to the 81,000 level, 81,662.88 at intraday 0.87%. That's not doing pretty bad there. Let's move on to the other side of the other markets there. Egyptian Stock Exchange, the EGX 30, 0.80% at intraday, 29,000, just gradually climbing back to the 30,000 level, which you can see at intraday, while Kenya Stock Exchange for Tuesday's trading session, it closed at 0.30%. That's for the Kenya All-Share Index, what you call the NSE All-Share Index for the Nairobi Stock Exchange. And now from the equities market, let's talk a bit about the fixed income market, where we see first the impact of the Naira's decline, as well as the Forex market, the Forex reserves also being in the decline, and some other factors within the fixed income market. Now, to give us more perspective about this, let's bring in our analyst for today, Senator Audu, a Forex and fixed income dealer with Access Bank. Now, thank you for joining us, Senator.
Thanks for having me, Aniti.
Okay, now, let me ask a question. Is there a renewed pressure on Nigeria's Forex market? Because just last week, where the central bank resumed after 10 years the retail Dutch auction, which was expected to spur the Naira as well as drive liquidity in the market. Now, tell us what is happening to the FX market. What's going on there?
Yes, so as Riley said, the CBN came in last week to conduct the retail Dutch auction. At that auction, over $800 million was sold, about $815 million to various people and entities who had requested to be presented at the auction by banks. So prior to that auction and its announcement, we had seen the Naira trade at 1,600 levels, but immediately following the announcement and the conduction of that auction, we did see an appreciation in the NFX and the NFM rates to below 1.6 levels. Although we saw a depreciation in the NFM rate, which is the rate that tracks the Nigerian Autonomous Foreign Exchange Market, we did see a minimal depreciation there of about 11 Naira. We saw a corresponding appreciation in the NFX rate, which is the fixing rate that tracks that market. We saw an appreciation of about 4 Naira in that market. So although we've seen rates moderate at about 1,577 Naira per dollar, this is still below the 1,600 levels that we had seen before the auction. Speaking to the reserves, we did see a marginal decline. Yesterday, we saw the figure print at 36.62 billion, but this is still a robust reserve position compared to where we are coming from, which was just under 37 billion.
Okay, so from the FX reserve, let's talk about the fixed income market now. Yes, yesterday we saw a bullish sentiment across the treasury bills as well as the bonds market. Now, 24 hours from now, we will be seeing a new inflation data, which at some point, some are saying 34.26, while some are saying is expected to reduce due to number of factors. And how is this going to play into the fixed income market as far as yields are concerned?
Okay, so over the past two inflation figures that we have received for the past 2 months, we've seen only a marginal increase. We don't expect that the trend will be significantly different this time. So market participants have largely priced that in. With regards to how the market is trading more in line with liquidity. We did see liquidity figures decline following the FX auction conducted last week, about 509 billion in the red yesterday, but opening today, we've seen a significant improvement to about 7 billion in the green. What we've seen market players do is largely be bullish. As you rightly explained, we've seen a bit of a bullish sentiment across the bills. We've seen the May bills trade at about 24% levels, while we've seen the February bills trade at about 23% levels. These are bills that had been trading at 24 to 25% levels prior. On the bond side, the reason for the bullish auction is a little bit different. We're meant to have the bond auction on Monday this week for it to settle today, but the DMO postponed that auction by a week until next week. Speculations is largely along the side that there was the FX auction being conducted last week, and the DMO did not want to crowd that space. So we did see that auction postponed to next week. But we also saw an amendment in the calendar. So previously, the three bonds on offer had 100 billion each allotted to each of them to be offered 300 billion. But we did see the DMO reduce the size on offer across all three bonds by a cumulative 110 billion. So on the 2029s, we have 70 billion offered. The 31s we offered, and we have another 70 billion, while the 33s we have 50 billion offered, for a total amount of 190 billion offered across all three bonds. So considering that reduction in the size on offer, we did see market participants start to cover their short positions on some of these bonds. So the 23s, for example, the 33s rather, for example, had been trading at about 22.2%, but immediately following that announcement today, we've seen those bonds trade at about 21.65%.
Senator, quite a lot of activity at the fixed income market as well as the forex market, but I think we'll leave it there and look out for other numbers coming for the close of midweek trading session, and look ahead for the July inflation report, just like every other country around the world. Thank you so much for your analysis.